Ladies and gentlemen, good day and welcome to the PPAP Automotive Ltd earnings call for Q1 FY26. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Jain, Managing Director and CEO of PPAP Automotive Ltd. Thank you, and over to you, sir.
Yeah, thank you very much. A very good morning to everyone. I extend a very warm welcome to all the participants joining us on this call. I am also joined today by Mr. Sachin Jain, the CFO of the company, along with our investor relations advisors, strategic growth advisors. I hope all of you have had a chance to look at our results and investor presentation, which are available on the stock exchanges as well as on our website. I'd like to start today with the industry highlights. India's automobile industry registered an overall sales decline of 5.1% in Q1 of financial year 26. Passenger vehicle volume fell by 1.4% year-on-year, and two-wheeler sales contracted by 6.2%. While three-wheelers inched up by 0.1%. Commercial vehicle sales were marginally down 5.6%. Looking ahead, SIAM maintains a cautiously optimistic outlook for Q2, supported by expectations of a normal monsoon, festive season demand, and accommodative monetary policy. However, supply constraints on rare earth magnets from China remain a key risk factor to monitor for the sector. Now let me take you through the operational highlights for our company during Q1. We began the financial year on a strong strategic footing by securing lifetime orders worth rupees 86 crores, including 11 crores from EV programs. These wins underscore the continued trust of our OEM partners and our growing traction in the EV space. With these additions, our lifetime order book now stands at 3,439 crores, providing healthy revenue visibility. The newly secured orders will be executed over the next 3 to 5 years. That said, Q1 is typically a seasonally soft quarter for us. Consolidated revenue from operations declined by 4.9% year-on-year to 116.6 crores, primarily on account of subdued demand and deferment of project launches by key OEMs. Capacity utilization in the parts business stood at 62%, reflecting lower volumes and irregular order inflows from major customers. Despite these near-term challenges, we expect a gradual recovery from Q2, supported by improved execution and ramp-up of recently secured orders as well as new models. We are optimistic that we are on track to deliver our stated guidance for financial year 26. Automotive parts business remains our primary growth engine, with a strategic focus on enhancing content per vehicle, introducing higher value-added products, and expanding our customer base. We continue to engage for new business opportunities with all the OEM manufacturers, underscoring our deep-rooted relationships and robust presence across both ICE and EV segments. In our aftermarket business under LPIS, we maintained a healthy momentum with 1,275 SKUs, supported by both offline and online sales channels. The revenues from this business increased by 27% year-on-year in Q1. Our focus remains on expanding the domestic network and growing exports, targeting 10% revenue share overall by financial year 27. Our commercial tool room business under Meraki Precision Tool Engineering is on track with a strong order pipeline across automotive and non-automotive customers, supported by capacity enhancement plans to 150 molds per year. The order book showed a healthy increase of 30% year-on-year in quarter one. Our industrial product division business is being rebranded as Avinya Industrial Products. The focus continues in leveraging our plastic and rubber extrusion capabilities, as well as plastic injection molding capabilities for diversified industrial applications. The sales were almost similar to the same quarter last year. However, this year, this division should do twice as much as business done last year. Our battery business under Avinya Batteries continues to advance its repositioning towards storage solutions following the strategic shift from mobility applications last year. While market adoption remains gradual, the division is making steady operational progress, engaging with marquee customers and laying the groundwork for scaling in the upcoming quarters. We remain confident that our new business initiatives will gain strong traction this year, helping to de-risk our portfolio from sector-specific fluctuations. We are energized about the opportunities ahead and look forward to delivering a successful year. Thank you very much for your time and engagement. We can now open the session for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Jigar Shah from Elevate. Please go ahead.
Hi, good morning, sir. Sir, a couple of questions from my side. Were there any supply chain challenges faced during the quarter? And also the subdued margins were mainly due to lower capacity utilization or higher material costs? And additionally, how do you view the stability of raw material prices in coming quarters?
Yeah, thank you very much for your question. There were no supply chain challenges during this quarter. From our side, things have been quite smooth. Raw material prices have been stable, and they are getting on the lower side as well. We are improving our rejections and all, so material utilization percentage is also getting better. The margins that you see here are primarily because of lower capacity utilization and lower sales. If you look at the profile margin, the profile is getting better operationally, but only because of drop in sales, the bottom line is subdued.
Okay, understood, sir. So secondly, with Q1 starting on a lighter note, so what gives us confidence of achieving 600 crores revenue guidance for FY26?
Like I said, Q1 typically is the slowest quarter for us, and we already are sitting on 11th of August today, and whatever sales we have seen in July and August, and not only from the automotive side, but from all the businesses side, I think we are on track to achieve that guidance. One more important factor is that there were a couple of new models that production was supposed to start in this quarter one, which has gotten delayed, which is delayed by the customer, not by us. We are ready for it. So as soon as these models start picking up their committed volume and the time when it's supposed to start, we will again come on track for the guidance.
Understood, sir. Understood. Thank you. Thank you. That's all from my side.
Thank you. Reminder to the participants, please press star and one to ask a question. The next question is from the line of Rajiv Saraf from Saraf Broking. Please go ahead.
Hello. Am I audible?
Yes, sir.
Yes. Sir, given the current demand environment, how do you see the domestic auto sector performing over the next 2 quarters in terms of volumes, new model launches, and customer offtake? And how does this outlook support your confidence in achieving the FY26 revenue and margin guidance?
Yeah, thank you very much, Rajiv ji, for that question. As I said in my opening address, I think there are a little bit of challenges for the entire automotive industry for overall growth for this year. I think it's quite a challenging environment, and we have to wait for how things will pan out from the demand perspective.
Okay.
Your second part was about the new launches and all that. So, like I've been saying in all the previous conferences as well, we are closely monitoring the trends which are following the industry. And as you know, SUVs are getting very popular. Tata and Mahindra are gaining market share. And EVs also are going to play an important role in the coming future. So our strategy of getting new business is completely aligned with all these market trends. Unfortunately, some projects have gotten delayed. They were either the customer was not able to make that many cars when it comes to EVs because of all these rare earth problems and approvals which are happening now. And some projects which were supposed to start SUV on the ICE part, they have gotten delayed by 3 months, which are supposed to start somewhere around end of Q2. So all these things put together, I think we are on the right footing. Whatever best we can do, we are doing. We're getting all the business based on the latest market trends.
Okay. One more follow-up question. So margins came under pressure in this quarter alongside weaker top-line performance. How should we look at margins trending in the coming quarters?
Well, as I said, yeah, Sachin ji, you want to take that?
Yeah. So on the margin side, if you see, our margin is primarily dropped due to the subdued sales. As we are quite positive for the rest of 9 months that we will be able to achieve the sales which we have planned for the rest of the quarter. So definitely we are again back into the double-digit margin side on the standalone basis, also on the consolidated basis also.
Okay. Yeah, that's it from my side. Thank you, sir.
Thank you. A reminder to the participants, please press star and one to ask a question. The next question is from the line of Rajvi Shah from Bright Securities. Please go ahead.
Oh, hi, sir. Thank you for the opportunity. I just had few questions. The first one is, could you share the segment-wise breakup of the order book along with the anticipated revenue conversion around the next 4 to 5 years? Hello?
Second,
Yeah,
you are asking about the... Yeah. So you are asking about the segment-wise order book breakup?
Yes, sir.
Hello? Yeah. So
Hello. Yes, sir.
In the Concall itself, we have informed that from the automotive side, we have the order book of 3,439 crores. So it is to be executed across 3 to 5 years based on the model life. And beyond that, the tooling side, we have the order book of, as of now, around 30 crores. So that is to be executed over 1.5 years, and we will also keep adding more orders in the rest of the 9 months. If you talk about aftermarket, so aftermarket side, it is based, you see, it is more we sell to the dealer in that segment. So you have the recurring order in that segment. So we have also grown by around 27% in the quarter one itself.
Okay. And
And same is
additionally,
applicable for
sir,
the
yes.
industrial product also.
Okay. And additionally, sir, who are the three top customers and what proportion of the order book would they represent?
So again, currently our top three customer is Maruti along with SMG. And now Tata is our again the second biggest customer, and the third is currently Honda. And if you talk about the order book, so order book side also it is in the same way, because currently Maruti hold up more than 50% share in the car industry, and we are in all the models which are going to come up in next 3 to 4 years, for which RFQ has been floated or LOA has been issued. So his order book is also like that only.
Okay, sir. And sir, my next question was like in Q1, consolidated revenue declined by 5% YOY, and the capacity utilization in the automotive part business stood at roughly 62%. So could you elaborate on the key factors driving this softness?
So majorly because of the subdued demand from the customer side and shifting of the certain SOP which were due in the Q1 itself.
Okay.
So that resulted to the lower capacity utilization quarter.
Okay. And also, what is your near-term visibility on order schedules and production volumes, and how do you expect capacity utilization to trend in the coming quarters?
For the automotive side,
Yes, sir.
yeah. So as already suggested by Mr. Abhishek Jain in the previous call also, sir. So we are there are certain SOPs also due in the Q2 and which were shifted in the Q2, which were due initially in the Q1, and based on the current order book in our hands, so there would be definitely uptick in our capacity utilization also in Q2 and Q3 and Q4 based on that.
Okay. Okay. Understood. That was helpful. Thank you.
Thank you. The next question is from the line of Naveen Saraugi, an individual investor. Please go ahead.
Yeah, thank you very much for this opportunity. Sir, I have two questions for two different segments. One is about your, battery segment. So, going by your presentation, I understand, we are expecting some turnaround in this year. And, and there is an improvement of margin as well in battery segment. So, is this turnaround is very much intact in this year, or this can be deferred considering, the kind of concerns you have just said that, this year will be very challenging and all that?
नहीं सरावगी जी, जो चैलेंज है वो ऑटोमोटिव इंडस्ट्री के ऊपर है. बैटरी बिजनेस में जो है वी आर बेसिकली डूइंग एनर्जी स्टोरेज सॉल्यूशन, दैट हैज नथिंग टू डू विद मोबिलिटी सेगमेंट. दैट सेड, जो टर्न अराउंड की हम बात कर रहे हैं, दैट इज वेरी मच हैपनिंग नाउ. What we've done is, earlier we were engaging with lot of different customers, getting small trial orders from them and keeping ourselves very busy in developing products, and then very low volume of business happening. When we pivoted this whole thing from mobility to storage solution, now we've also pivoted. We're not going to get to do business with lot of customers. We are keeping a very tight focus on our customer base. 5-6 customers are there, promising customers which are big players in the industry, and we are continuously engaging with them, and we've had positive feedbacks from them. So this month I think will be very crucial for this battery business. This month we should be able to sign a few contracts which will put this battery business on path to recovery, and hopefully this year we should come out of the concerns for this business.
Great to hear this. And I understand, this BESS segment is very buzz vertical currently in automotive business. Just one thing, do we have any ambitious target, like, if we are, expecting that there is a turnaround in this year, so, how we position ourselves down the line, let's say, 2 year, 5 year, if someone is taking a very long-term bet on, your company, and, particular to this segment, the BWS battery energy storage segment. So what is our, at least our vision for this vertical for the next 4-5 years?
Sarojji, because this vertical has been in pain for last 2-3 years, so we are not setting ourselves a target till the time we have recovery in this business and we become at least a zero loss making division. So right now we are not setting a target for ourselves what to do. First, we have to make sure that this business becomes stable and is not detrimental to the financial interests of the company. After that, once we have confidence in this business, then we'll take a call about what has to be done on the long-term basis.
Okay.
Right now, we are not planning to do any investment in this company. Whatever investments are already done, we want to make sure that they are utilized to the maximum first, and then look at the business and then start thinking about investments. As of now, there is no target for us on long-term basis. Whatever capacity we have in
Sorry
this
to interrupt you,
facility
sir.
already.
Mr. Naveen,
Yeah.
can you please mute yourself? For there is a background voice from your side. Yes, sir. Now you can speak.
So we are not planning to do any capital investment or something in this business right now. Whatever investments have been done, we want to utilize those investments first and then stabilize and then think about expanding.
Yeah, fair enough. And one more thing about, our aftermarket segment, NPs. So, see, there are two channels, PPAP is using. One is through, OEM route, right, where, we are sending after sales, products to directly, the original equipment manufacturer. The another approach is, this online approach where we have our own platform, NPs, along with Amazon, Flipkart, etc. Right? So, do we have any? I think this segment is also kind of stagnant. If I see, last 3-4 quarters number, going by your presentation. So, do we have any plan of making some expenditure on promotional activity or some kind of sales expenditure to expand or to increase our access into this online segment?
See, the segments which you are talking about, first of all, this aftermarket division of ours, they focus on 3 different kind of products. One is body parts, one is body parts and spare parts, second is consumables, and third is accessories. So all 3 of them have different product range which are different from the OEM customers. We make our tools and everything by ourselves and we supply it to the aftermarket. Online sales channel is basically used for the accessories part, and we do a lot of digital marketing and Google ads, everything we are doing to promote sales over there. The first 2 segments, the body parts and the consumables, this is basically an offline channel in which we have a system of distributors across the country. Today also we have around 150 active distributors and we continuously engage with them. Just last month we did our distributor meet wherein we called the top 35 distributors to Delhi and we showed them the facilities of all the manufacturing facilities here in North. And then we engage with them about what is the vision for this company, what is their concern, and how we should work together as partners in the business instead of having a short-term relationship. So a lot of things are happening there as well. And this in the Q1 compared to the previous year, we've already grown this business by 27%. So every year there is growth happening, and we are quite positive about it now. We already have a team of around 40 people, including the sales people on the ground and on the office to organize, and in the warehouse to manage the operations and all. And we are planning to increase those numbers by around 60 people by the end of this year. So gradually we are increasing our power for this business.
Okay. Thank you so much, for all the response. Thank you.
Thank you.
Thank you. A reminder to the participants, please press star and one to ask a question. The next question is from the line of Pooja Mehta from JK Securities. Please go ahead.
Hi, sir. Good morning. Just one question from my end as of now. So just wanted to view or outlook on the current, given the current global and geopolitical uncertainties, how do you view the export business for the industrial product? Just wanted your view on the same.
Well, Pooja, I think your concerns are very profound. We are engaging with all the customers, especially for the US market. One customer of ours, they have kind of delayed their decision by another 3-4 months due to this tariff war. They are also waiting to see what is the final tariff that is going to happen. It is obviously going to affect the export plan for the industrial product business. Certain customers are continuing as of now, but we don't know what is going to be the situation. It is, I think, very difficult for anyone to make any prediction of how export is going to pan out this year.
Understood, sir. In case of any further questions, I'll come back. I'll just get in the queue now. Thanks.
Thank you. Ladies and gentlemen, as there are no further questions, I now hand the conference over to Mr. Abhishek Jain for his closing remarks.
Yeah, thank you very much. Financial year 26 has begun with strong strategic wins and a healthy order book, even as Q1 reflected near-term revenue moderation and amid a subdued industry environment. We expect the coming quarters to gain momentum, supported by new program launches, enhanced execution, and a gradual recovery for the automotive sector. Thank you all for joining us today. We hope we were able to address your questions effectively. In case you have any further queries or clarifications, please feel free to reach out to us or to our investor relations advisor, Strategic Growth Advisors. Thank you very much, everyone.
Thank you. On behalf of
Thank you, everyone.
Thank you, sir. Thank you. On behalf of PPAP Automotive Ltd, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.